kick off. Everybody, if you could just mute your mics for me. Thank you all for joining. For those who do not know me, my name is Henry Kiang, and I'll be your moderator for this discussion on AI and banking today. When I'm not moderating web presentations like this one, I am CEO of Metropolitan Bank, a longstanding community bank headquartered in Oakland, and I am a director with the Association of Asian American Bankers, which is putting on today's event. The format today will be something of a fireside chat where I will ask some questions of our speaker, and at the end, you will be able to ask some questions of your own, but through me. So please send any questions you have through the Zoom program to me, and I'll do my best to ask them. It is my pleasure to introduce our speaker, Michael Young, who's the founder and CEO of Photon Commerce. Michael brings a unique perspective to today's conversation because he sits at the intersection of artificial intelligence, financial technology, and the highly regulated world of banking and payments. His work has involved some of the largest names in technology and financial services, and he currently serves on the board of advisors for Nacha, that organization that sets the rules for the ACH network, the payment system that powers trillions of dollars of payroll, bill payments, and electronic transfers across the United States each year. He helps them advise on AI strategy for the future of banking and payments. He is also co-author of Smart Instant Payments, a book exploring the modernization of the financial system alongside leaders from the Federal Reserve, the Clearinghouse, and Jack Henry. Before founding Photon Commerce, Michael was an engineer at IBM, pursued advanced research at Stanford, and founded multiple technology companies focused on innovation and automation. Today, as bankers, we are all hearing about AI, but many of us are still asking practical questions. What does it really do? How will it affect our customers? How will it change our banks? And how can community banks take advantage of these tools while managing risk? Michael is here to explore those questions with us. Michael, thank you for joining us.
Thanks so much, Henry. It's a pleasure to be here. Fantastic meeting you all.
Michael, before we dive into AI more broadly, can you tell us a bit more about your background and what led you to focus on AI and financial services?
Of course. I've been fortunate to have been also speaker, like on stage at the FIS conference. I've also spoken with the Federal Reserve and with the Clearinghouse too on payments innovation and banking innovation. One of my last, I think, talks has been with the head of AI at Visa. And I've also a regular attendee at like Nacha and speak there many, many times. So I'm a payments nerd at heart, as well as AI nerd. So a little bit about myself. I grew up on the East Coast outside of New York City, and then pursued a PhD at Stanford, dropped out of there, and then started 4 technology ventures, raised about $57 million across them all, had 2 acquisitions, went into the supply chain of Apple, too. So in the last 7 years at Photon Commerce, I've been helping banks and fintechs and technology platforms like FIS, Fiserv, Corpay, and a lot of card companies, not to mention also NVIDIA, basically digitize payments data. So we've been able to process about over $50 billion worth of payments, automating a lot of processes around that, especially around AP, AR, accounting, and bookkeeping. And so I am in San Francisco and FIDI, work with a lot of fintechs there on reconciliation and accounting automation. So it's a huge pleasure for me to be here and share a little bit about what I'm passionate about.
Hey,
You mentioned you're a little bit of a payments nerd. How did that be? It sounds like you come from a more broad AI generally or technology generally, but why payments? Why? How did that come to pass?
Yeah, I think one of the sort of founding vision or inspiration was about 7 years ago or so. I had a meeting with Max Levchin, who's the co-founder of PayPal and CTO of PayPal.
Mm.
He shared his founding vision for how PayPal came about. And he said that he wanted to find a way to secure the IOU and digitally send and receive the IOU. And that basically, right, ushered the digital payments sort of revolution as we all know it. So that was extremely inspiring to me. I think as we look into banking, we look into B2B payments, a lot of the processes are still analog. They're not digitized. They still have a lot of human intervention involved. They still involve paper or PDFs or emails, right? And payments, many bank-to-bank payments, right, still take hours or days, right, to settle and to even authorize. So in the age of AI, we believe that everything should move towards being instant and digital. So we then started the company to solve one of the most critical problems, which is eliminating paperwork and analog data, so that not only can data be digital, it can also be then smart and basically like rich. So when you send a payment, it should have full-on reconciliation data as part of it, so that the payment itself can self-reconcile. So what that means also, we had number of meetings with even CTOs and CEOs at Visa, uh, MasterCard, Amex, and a bunch of other fintech companies. They said that level three data is the holy grail of the payments industry. So level three data is basically itemized SKU level data. They shared with me that banks, card companies, issuers, even processors, they're actually quite blind to what people are actually paying for, right? In a transaction, you just see the amount, you just see the date, right? And you see this really cryptic kind of memo that doesn't really tell you very much. So we started working with FIS, Fiserv, Corpay, and a bunch of other fintechs to then uncover basically itemized data so we can understand what consumers and businesses are actually spending down to what you're buying at Starbucks, what you're buying at, Amazon, what you're buying at Walmart too. So one of our first shareholders in the company was the CFO of Amazon Fulfillment, and then we got our sort of start from there.
Is that similar to blockchain or is that totally different? You can see that I am a newbie when it comes to this stuff.
Very different, yeah, unrelated. So
Okay.
we don't use any blockchain technology.
Okay. Okay.
Yeah.
You mentioned well, I mentioned Photon Commerce. I think you touched on you went into payments a little bit, but what exactly does your company do?
Yeah, at Photon, we are the agentic infrastructure company for
What
banks and
what does
fintech
that mean?
platforms to basically eliminate paperwork and to digitize all the data off of like paperwork. So any like PDF, any email, any sort of like piece of paper, even like a check, we digitize, recognize, categorize, and then are able to not just capture all the data off of it, we can actually intelligently then route and make decisions and extract insights from that type of data. So we build like production grade AI agents for accounting workflows, especially AP, AR, reconciliation, KYC, KYB, and treasury workflows.
Hmm.
These all wrap around existing cores as well as like accounting and ERP systems. So basically underneath, it's a technology that has computer vision, natural language processing and statistics that are applied then to, say, loan STIPs, KYC, KYB documents, statements, invoices, check and lockbox documents. So we digitize and standardize all of that data.
Hmm. Do you actually use AI models to help like um I guess perform these processes, automate these processes, or is it more just you create a program that takes in data and I guess churns out a product, but maybe the incidents of error are less, it's more standardized in its product. Is it like that?
Yeah, we developed our own basically machine learning models back about 6 to 7 years ago. We spun out of one of the incubator programs at NVIDIA,
Mm.
and we have basically computer vision, natural language processing, and statistical models that can understand financial data, especially like analog financial data, say like a screenshot or an image or PDF, um, uh, uh, and then be able to standardize and recognize all that detail. Some of the because we got started many years before the most recent kind of like LLM AI models, we are generally about 20 times faster. So we have sub-second latency and speed. So within a second, we can make decisions and extract data. And we're also reproducible and deterministic. So many times, if you talk to, say, a chatbot, if you just say the same thing over and over again, it'll actually give you different responses, right? That would be a nightmare for compliance and for like troubleshooting and things like that. Our models are actually deterministic, so the same input will give you the same output, every single time. Um, which is
Yesterday, when Michael and I were preparing for today's presentation, he mentioned that his company, one of the services it performs is it will uh, take a check from your purported client and it will compare that check signature with your signature card. And, the way any bank does it today, I mean, this check takes a journey through the Federal Reserve. It's presented at another bank. It takes a trip to the Federal Reserve. And it's actually pretty labor intensive still today for big banks, small banks. Well, what his software can do is it'll compare signatures. It incorporates learning experience, maybe inputted by employees, but it learns this stuff and it basically looks at possibilities of it being um, fraudulent, and it makes a decision as to whether or not like the check is fake or not, right? It performs that service, but like in an instant and with much lower incidence of error. Um, and we were talking about how that tool can just make your bank process better and make your employee more efficient. Um, anything to add to that, Michael?
Yeah, absolutely. So work with a number of banks and lockbox providers today, some of the largest ones in the industry, to basically be able to understand not just like personal checks, but also business checks. We capture also the all the information around the check, say the stub, the coupon, the list, say the like bill, or the correspondence that's next to the check too. It's all this kind of unstructured and messy, almost like chaotic data that before AI was extremely manual to process. So because we understand all of the surrounding data, even the envelope, like we'll scan, because sometimes the check is missing sort of critical memo information, but it's on the envelope or it's in the correspondence as to what the purpose, right, of this check or payment is. We'll capture that and then be able to understand it and then make sure it makes sense, and then be able to also make our application, cash application, significantly higher match rate and reconciliation rate.
Uh, let's zoom out and talk about AI and banking generally. Sorry about my dog. I will kill him after this meeting. Anyway, we've been hearing about AI for years. What's actually different today that makes it more actionable for banks?
Excellent question. So in general, there's three things that converged in just the last 18 to 24 months. So first, the model quality of these AI models has crossed the production reliability line. These frontier models now sustain tool use loops at production latency. As one example, JP Morgan spends $18 billion a year on technology, and then several billion just on pure AI technology. They today operate more than 450 AI use cases in production that they published. And then they're targeting over 1,000 like use cases by this year end. So there's already, they report 200,000 employees at JP Morgan using their internal AI and LLM suite on a daily basis. So this is like full on production. It's not just like a pilot and it's not just like hype. So second, the adoption math has also changed. So there was a 2025 Census Bureau like working paper that found that U.S. bank, United States bank like AI usage basically went up about fourfold in the last like 2 years. So U.S. Banks now use like AI that lent more to distant borrowers with lower default rates and also lower interest rates. So the AI helps banks reduce like information asymmetry, and that's a really large foundational change. The third is that the U.S. Regulatory framework was also rewritten very recently in April of this year. So the OCC, the Federal Reserve, and the FDIC actually jointly issued this pretty interesting document called the Model Risk Management Guidance. So they formally rescinded their previous MRM, Model Risk Management Guidance, and then basically uh, made their definitions of like agentic AI significantly more precise and like who it applies to as well. So there's a lot more regulatory sort of oversight now over like AI models and risk models too. Those are the
Um,
generally three forces
where are you
now.
seeing the most immediate impact of AI within banking operations?
The number one cost driver for banks is employees, it's labor, and the largest pool of, say, human work tends to be around like loan origination. Um, so the Census Bureau working paper that I sort of cited before, it documents the credit quality side. So there's a lot of banks now using AI that will lend to more distant borrowers with lower default rates and lower rates too. Um, what the paper though doesn't seem to say is that the time to decision is collapsing in parallel. So STIPs that are now understood and parsed in seconds by machines and algorithms, rather than like humans spending days looking over them and humans doing exception handling. So AI now can actually do exception handling remarkably well. Um, and then any adverse action notices uh, can actually be auto-generated with full ECOA explainability. Another one is KYC and KYB. Um, so perpetual diligence is the new bar in the industry. The agent runs ongoing screening on every customer instead of a periodic like re-KYC sweep. So this is it tends to be an area where the regulatory load and the consumer experience benefit like converges.
Um, so would you say like the one area or the areas to change most, their loans and know your customer. Those are the areas that are going to change most because of AI.
I think those are the most immediate sort of impacts. If we look perhaps slightly longer term, I think there's a bunch of other even more sort of like visionary changes like on the horizon. But I think those are the lowest hanging fruit. So loan origination and then KYC, KYB, especially as it applies to new account like opening. So for instance, a sort of if a new customer wants to open up an account, right? They want to be able to have the account opening happen in the fastest time possible. They don't want to be forced to cough up like dozens of documents and then wait a very long time, right? They want to be able to get going really fast. So streamlining the KYC KYB process would be key.
Mm-hmm. Mm-hmm. Let's talk a little bit about client experience, where AI might, I guess, meet the customer. How do you see AI changing the way customers interact with their banks on a day-to-day basis? Uh, with,
Yeah.
yeah, with the
Oh,
inclusion of AI.
yeah, fantastic question. So I believe that the most important client experience shift will actually be invisible to the customer. So it will happen at the first account opening stage and then the loan application. The Census Bureau finding that I said it earlier said that like banks using AI can extend credit to borrowers that they previously couldn't reach or serve. So offering them lower, rates, and from that also overall the bank can experience lower default rates. From the customer seat, that means that like a small business owner in say like an underbanked area that would have been previously declined or never even been approached, right, would now get approved, served, serviced at a highly competitive rate, right? And they would be able to do that within just like hours of service rather than waiting days or like weeks. The second, I think, invisible shift will be around, say, the whole document collection, document management side. So if like the application is asking for bank statements, tax returns, articles of incorporation, KYC documents, an insurance binder, avoided check, right? Like having all those documents is a big burden for the applicant as well as for the bank. So in like a non-AI, non-agentic flow, right? It could customers can churn or they just don't have the utility bill or whatever like readily accessible, right? So then they just kind of abandon and walk away from the bank. Whereas in like a more like agentic flow, we can actually manage and retrieve these documents um, in a much more streamlined fashion. So I think those are the two main areas that like customers can immediately experience like benefit.
A couple weeks ago, I called PG&E and I paid a bill. In doing so, I spoke with a person on the phone, or it was someone I thought was a person. And it turned out it was an AI bot. And I was asking, like, it, I think I performed more tasks than simply paying a bill. But and I just remember after hanging up being amazed that that was an AI bot. It was like talking to a real person, and I actually asked and asked to perform tasks that you wouldn't think that just an automated system could perform. I know that Wells Fargo has invested a lot of money in AI. I know Bank of America has an AI agent already. I don't know exactly what it does, but in your experience, what does a best-in-class AI-driven client experience look like today? What are big banks doing?
Yeah, one of the best examples would be, as you mentioned, the Bank of America virtual assistant or the customer service kind of rep, Erica. Um, Bank of America shared that they exceeded 3 billion client interactions with Erica. And Erica basically serves 50 million users, customers of Bank of America. And that's been since their launch in 2018. So this is like even before the recent kind of AI like cycle. Um, so uh, yeah, basically it's not just answering extremely sort of basic questions about hours and routing phone calls in a sort of like the old school operator way. It can actually you can ask it uh, very deep kind of financial questions about um, like upcoming bills and like what the sort of balance means and things like that. So it's quite smart. And so I think one thing is that generally the top 10 banks can afford to have in-house technology like this Bank of America, but the banks, outside of the top 10, they generally need to lean on, other providers for already pre-trained, models and tools. So to answer your question, what does the best in-class AI-driven experience look like? I think one is that everything should be very fast and very, very efficient. So the experience should be digital, like digital first, or even mobile, um, instead of always having clients, go in branch and to bring pieces of paper, with them. So with that, it has to be document light. So the customer can virtually or remotely upload a whole stack of the documents that they need for account opening or for loan origination or approval. Nothing is rekeyed or like manually entered by the customer, so they don't need to like type up a bunch of things. So income verification, debt to income, cash flow, collateral valuation, that can all be instantly parsed with like AI agents, not just put into a queue for like humans to review after like many days. So with that, decisioning should happen in just like hours instead of days. Um, Otherwise, like the customer may like walk away to another bank due to like more and more people having higher expectations for like speed. Um, and then I think the last thing would be that any models should be explainable if there's any type of decline. And that's not just from the client, that's also from regulators too. So every adverse action has to carry the ECOA, grade reason code, like with the data and the model signal that drove that decision. So that's basically a requirement from the MRM, the Model Risk Management Guidance from the OCC and the Fed.
Um, you said that maybe the priority of any bank, but community banks certainly maybe at this junction is that we should work to speed up the process on anything that we do, right? Speed is what the goal should be for our end user because our competition maybe is going to be faster as they incorporate AI.
And then even generally beyond just speed and efficiency, it would be just having a delightful and modern kind of experience
Mm.
too. So having say like a portal or a login, right? That's beautiful, right? And modern. And then yeah, getting rid of sort of like legacy and sort of archaic processes. So it's not just like purely about speed, but the overall like experience of someone needs a loan or advance or anything like that, right? That's provided for in a hyper modern but also efficient like process.
For community banks that maybe don't have or haven't begun to incorporate AI, where should they start? I mean, should it be the log? You said the experience should be beautiful, but where can a bank start? I mean, yeah, the goal should be at the end user can apply for a loan on their phone and maybe get a a decision maybe seconds after they submit their request online or on a phone. That would be the ultimate goal. But I mean, for a bank that has nothing set up yet, where do they start first? Where are their investment dollars best rewarded? Where's the ROI the highest?
I think the most sort of the lowest hanging fruit would be on account opening. So kind of interviewing a new customer that walks in or not physically walks in, but even virtually sort of walks into the bank and wants to open up a bank account, asking them about sort of expectations and then their actual experience opening up a bank account either as an individual or as a business. Um, and then understanding like if they have sort of unrealistic expectations that they can start paying people like within the same day, right, of them walking in or not. And then asking those same folks about their expectations around like loan origination and credit decisioning. Um, so th those are, I think, the two biggest uh, sort of highest ROI, areas. Um, so I would, recommend banks pick like one origination workflow. So it could be like, say, small business term loans, or owner occupied CRE, wrap the existing core with like an AI agent that then owns the STIPs, the intake, the income verification, and then the cash flow extraction, and then measure the days to decision and the analyst hours before and after. And then you can basically calculate the efficiency gains and the ROI from any sort of AI deployment that is available.
Um, for those banks that can't afford to build an LLM in-house, who are the biggest or maybe in your opinion, best vendors? I know you are in fact a vendor as well. Who are the players right now, I guess, in this field that a community bank can look to begin to adopt AI?
Yeah, great question. So I'll go through a bunch of possibilities and sort of directions. So the as I mentioned sort of before, right, only the top 10 global banks tend to have like billion-dollar technology like budgets to do things in-house and have their own sort of LLMs housed inside their own servers on-prem and train like their own models from scratch. So for community banks, the practical kind of like vendor stack usually has like two layers. So there's the core layer, and then there's the agentic like vertical layer. So those agentic like AI layers would be then focused on KYC, fraud, lending, treasury, and then like document automation workflows. So obviously the AI like agentic layer, that would be where a company like ours, sits. Some of the options there, so going on the core, obviously asking what your existing core may have to offer, because a lot of the cores they do acquire a lot of technology companies too. So those may be able to, you could plug and play those very, very fast since it's already, compatible with the core that you're on. Um, and then let's see, there's uh, certain, say like on customer service side, there's IBM, there's Nuance as well on like customer service like agents. And then there's also no code platforms and banking platforms like Q2. They have also connectors to dozens of sort of like sub like vendors too. So those are pretty popular. There's also like Kasisto or KAI as well. They're pretty well known in the customer service, space. If there's any kind of like specific areas anyone is, wondering about, welcome to, reach out and we can uh, provide some pointers.
Okay, Carol asks, how can AI strengthen a bank's security?
Yeah, one of them is, for instance, detecting if there's fake like data, fake documents, fake, picture or selfie or whatever, coming in, since more and more people are using AI to generate like fake information. AI, the banks then have to go into the sort of like the arms race of having AI, also to detect if people are weaponizing AI for like fraud.
Mhm.
So that is key. So, for instance, people do doctor, say, their bank statement um, or their check quite significantly. The fraud rates tend to be well over like 1%. Sometimes in certain areas, it could be over like 5 or 6% of the time. So check fraud has been on the rise too. So those are some areas to like enhance the bank security.
Um, and then I guess that's a good segue into what might be the biggest risks for a bank that's thinking about incorporating AI.
Yeah, from there was this CS like BS annual survey from last year. Um, it was saying that like 68% of like community bank leaders actually expect fraudsters to be using like AI. Um, and then like 27% of those people said that like AI enhanced social engineering attacks are their top like cybersecurity concern. So that's actually an increase from 15%. So there's also model concentration. If all the, say, AI agents are running on just one frontier model vendor, that's a single point of failure that, like, say, an investigator or examiner will eventually flag. So it's important to have like multiple agents too to basically check each other to have a sort of system of checks and balances. Um, and then there's agent runaway as well. So if an agent is operating outside policy, it's becoming sort of non-compliant and makes like real money decisions, then guardrails, right, rate limits, human in the loop on like dollar thresholds will become non-negotiable. And then finally, there's like explainability. So any decision that impacts customers needs a full-on um, audit trail that explains like the reasoning behind those agents, the tool calls, and the data accessed.
Is this what regulators are going to require, do you think? They're going to require multiple agents to check one another, maybe guardrails that hedge against the aforementioned runaway agents. Um,
Yes, exactly. Yeah, it's outlined in the OCC, Federal Reserve, and the FDIC like model risk management guidance. So it's a pretty interesting read. Yes.
um, this coming back to community banks um, that don't already have maybe they haven't incorporated AI into their business model. Um, like how important is like data quality for the implementation or institution of AI?
I think one way is to start following what a lot of the larger banks and the peers may be doing. There was this pretty interesting recap by the St. Louis Fed just last year for community banking at its community banking research conference. That report said that basically community banks are highly motivated to embrace digital channels, mobile banking, and AI to enhance operations. That basically conference summary just came out December, so about 6 months ago, 7 months ago. So it also outlined that the starting move for a lot of community banks is more operational and not strategic.
Hmm.
So it advises to pick just one workflow with clear ROI signals, say loan origination, loan STIPs, and deposit account, say KYC. Um, those are two of the sort of lowest hanging fruit. Um, and then be able to sort of integrate like a AI, like agentic provider into the existing core of the bank through any documented like APIs. Then measure the cost per task and cycle time before and after, and then be able to share that sort of delta, that change like internally, and then use that basically like ROI and result to fund the next like workflow.
You finding that core providers for community banks, like even Fiserv, FIS, Jack Henry, are they helping or hindering this AI move, the AI adoption?
They are definitely helping. So for instance, Jack Henry redesigned around like a componentized cloud platform. So banks can then implement just the core modules or services that they need, and instead of having like a full system replacement. So there's been a very large movement and trend in the market to have basically modular as well as like REST APIs, which basically prevents banks from needing sort of like open heart surgery of like say completely revamping their core. Things are now like very modular, so you can basically just like Legos tack on
Mm.
like agentic sort of like third-party applications in the background. So the cores now they're no longer like really a bottleneck. Maybe 3 years ago, they were a little bit clunkier, but now they've been modernizing. So and now the bottleneck is more the bank's own kind of operating model decision about which workflows it should focus on first.
Hey, Michael, do you think AI levels the playing field for community banks or widens the gap between community banks and larger institutions?
That's a fantastic question. I think it could do either. So the deciding factor is the execution speed over the next like 12 to 18 months. So it levels the playing field on one hand because many of the same kind of like frontier models out there with the same agentic like primitives, the same document automation, they're available to like a small community bank, like a $1 billion asset community bank, as well as they're also accessible to like a $4 trillion asset bank. So API access pricing has also been commoditized. There's a lot of like usage-based pricing going on. So that's a big structural change. And then on the flip side, though, it could widen the gap because the largest banks are running at scale and compounding, and then they have their own in-house like AI. So JP Morgan themselves, they spend $2 billion a year on AI. Um, and they find the equivalent or actually greater than that in like cost savings too, just from the AI investment. So they've
Because they're
been,
able to reduce labor costs or
um, yeah, I think it's that. Yeah. Labor costs as well as just speeding up, efficiency, but
okay.
also being able to extend their services to say uh, sort of client populations they weren't able to before.
Mm. They can
What,
just get bigger to justify the investment in AI.
yeah, so they have probably more and more sort of accurate, right, credit decisioning models, so that they can make better decisions, lower default rates.
Um, what's the biggest mistake you see smaller banks making when thinking about AI?
I think one of them would be treating sort of like AI or like being like extremely skeptical about like AI in AI hype in general, or treating AI as like a procurement decision instead of like an operating model question. So instead of asking like what vendor should be chosen, which can produce a lot of like stalled pilots, then the right question would be like what is one sort of critical workflow that we should rebuild around and sort of reinvent using like agents over the next like 3 to 6 months. So, which executive at the bank should sort of own the P&L for that, and then what will success look like, right, from that investment. So, that CSBS survey from last year. It showed that 85% of community bank leaders now say that like adopting AI for their institution gains a significant competitive advantage.
Um, Looking ahead, what do you think banking will look like in 5 to 10 years if AI adoption continues at its current pace?
Yeah. I think so. It's 5 to 10 years is a very long time. It's extremely difficult to predict what will happen in even like 2 or 3 years. For me, uh, so, but in 5 to 10 years, let me think. I think there's going to be really exciting, I think, innovations and products around, say, embedded banking. Um, so, basically, there's uh, the bank will become invisible. Its services will be hidden behind software and experiences, and even the chatbot experiences themselves. So agentic payments, like wallets, like digital wallets, virtual accounts, virtual cards. Those are areas that I'm extremely excited around. Um, Another one will be AI that can understand exactly what each consumer and each business is spending on, like drilling down to exact products, right, and services behind every single bank transaction. So in the future, I think if you just look at your bank statement and it shows, $10,000 or whatever, you can then drill down into what exactly are the goods and services like behind that transaction. Um, or on a consumer, right? If they spent $60 at Amazon, right? You can click on that and then see what exactly they purchased, right? Or if it's like a fraudulent charge, right, on their card or something like that. Or if they bought, say, 5 shoes, but then returned four, right? There's a lot of very confusing sort of transactions for most consumers that they may, do friendly fraud or actually not recognize, right, that charge. So I think just having richer data and smarter, more intelligent kind of bank experiences will be able to lower friendly fraud as well as like unrecognized like charges, right, on their bank statement. So that will dramatically enhance not just security and fraud and risk, but also just lend to a much smarter sort of like bank experience.
Hmm.
I think another one is if you look at a lot of the fintech like neobanks, right? A lot of the neobanks tend to be extremely pretty, like beautiful kind of wrappers around legacy banks. But because in the last 2 years there's been a little bit of regulatory change there, that's been pressuring a lot of the Brex, Ramp, uh, like Divvy, Mercury kind of companies to tack on a lot of say like small business and startup like as well as corporate tools. So you see these banks are now doing expense management, right? Travel booking, um, AP and AR, right? And full on like accounting. A lot of the AI companies too, they're going into filing your tax returns like for you just by plugging into your bank. So they're going straight after like Intuit, right? Which may explain the sort of, stock of Intuit sort of having right in the last year. So tons and tons of exciting opportunities around, say, tax and accounting, bookkeeping, and just from like smarter and richer data that a bank could have.
From a bank perspective, you mentioned in the future, maybe banks become invisible and they're literally working with, I guess, they would be I don't know, these fintech companies which would appear in one's wallet. Does that so you mean to say that banks should be looking to partner with these fintechs? Is that the eventuality?
I think that that is a eventuality, yes. And you see that happening like all the time where the fintechs are basically like marketing, companies that have extremely pretty but also highly optimized like experiences, right, for their like say business or even consumer base. And then they're partnering with like a more legacy traditional bank, right, to do that.
Yeah.
So Yeah, I think that's one area. Yeah, if not, eh, generally it's very difficult, traditionally for a like legacy bank, right, to reinvent itself as like a neobank. So
Right.
yeah, you still have yeah, that's where the sort of entrepreneurs, right, and fintech companies sort of come in, that cater to a specific niche in the market. So
We know that there have been fintechs that have bought banks, and I mean, at up until now, I'm not sure they bought banks for the charter. There's a, it's a regulated bank. The fintech is not as regulated. Um, I know this is just an area where people are sort of laying in wait to figure out like how they're going to make this arrangement really work and go to the next level, I guess.
yeah, yeah, there's basically been two routes for neobanks. One is if you look at like say SoFi, they acquired Golden Pacific
Right.
Bancorp. So they then that's one way to secure a bank charter just by acquiring an existing bank. So that's very interesting. And then the on the sort of other side, we see like Brex, Ramp, Row, Chime, Mercury. They latch on to a sort of legacy bank, but then build out corporate tools, right?
Hmm.
So like procurement, reconciliation, invoicing, right? Bill pay, and they do those extremely well. Uh, so then they cater to specific sort of right, demographics.
Second to last question, we're running out of time. Bonnie asks if AI is going to grow, AI as a solution is going to grow cheaper for community banks to basically adopt this technology.
Oh, absolutely, yeah. It's uh it's like it the economics fall sort of drastically in terms of costs over time. So you see a lot of the AI companies they're moving into like basically usage-based pricing, like pay as you go. Um, Now, obviously, for a bank, right, there's still a lot of sort of like compliance it needs to go through and sort of audit it needs to go through. So there's still like some sort of minimum. But yeah, there's been a massive democratization, right, of uh, technology and AI because of the rapid, basically like deflation we've been seeing due to AI models. And then yeah, every 6 months we see like the costs of AI models go down by about 3x, 4x too, with new like models coming out, and the world basically uh, racing to build like data centers like everywhere. So
These things cost money because of the data center that needs to basically support the AI model, right?
yeah, exactly. Yeah, it's a massive drain on electricity.
Mhm.
It's estimated between 1 to 2% of electricity in the United States goes towards basically data center AI.
Mhm. And
Right.
I guess as an LLM performs tasks, answers prompts, it's writing its own code. Where do we store that stuff? Do we have capacity to store all this data?
Yeah, well, that's why like Seagate and Western Digital and Micron and all the sort of component makers, right? The memory and storage companies, all their stocks are, sort of went vertical.
Right.
There's still, I think, some capacity, but the demand is massive. Like it's completely unprecedented. So, um,
So your answer is we can't store. Last question. If you were me, if you're running a community bank, what would your AI roadmap look like?
I would start with basically very short term low hanging fruit like wins. So look at what one can do in just 90 days. So focus on one workflow, get that into a pilot and then production, right, into full live mode. I think documents and paperwork, right, is sort of one of the lowest hanging fruit areas for banks. So digitizing and organizing, right, all of the loan steps, the KYC, KYB, like documents, checks, lockbox documents, too. Uh, Measure the cost and cycle times, right, before and after. Um, and then also measure any changes to say like fraud and AML upgrades from those like tools. Um, Measure all that stuff on an operating basis like monthly, and then longer term, I would say like after 6 to 12 to 18 months, then look at things like, say, voice AI or chat AI too, which then may change, right, the sort of experience that customers have, right, with the bank. Um, so those tend to be slightly heavier lifts, right, because they affect the customer experience a little bit. Um, so those are, I think, the two main areas.
I know I wanted to save some time for uh, broadly asking questions of the attendants here, but we've run out of time. We've gone over actually. Michael, I can't thank you enough for doing this for us and for the AAAB attendees. Please refer to aaabankers.org for future our calendar of future events. And thank you all so much for attending. I appreciate you. This video has been recorded, so anyone who's interested, or if you know others that might be interested in what we talked about today, go ahead and email me. I am at hkiang@met.bank. So hkang@met.bank. And I will send this link to you guys. I think Michael has put up his email as well. It reads Michael, Michael, at Photon Commerce, PHOTONCOMMERCE.com as his personal email. If you have questions, I suspect he's inviting you to email him with those. And thank you again, Michael. I can't thank you enough. Thank you so much.
Thank so much, Henry.
All right.
Pleasure
Happy
speaking with
Tuesday.
everyone. Have a good
Yes,
one.
sir. Okay. Thank you so much. Bye bye, everyone.